Welcome back to Ignite&Scale, the podcast where we dive deep into the journeys of visionary founders, disruptive ideas, and the future of industries. I'm your host, Mike Allen, and we're now deep into season 2, brought to you by Cambria Private Capital, where we focus on helping businesses scale, innovate, and achieve transformative growth. Today, we're talking about something that's bound to spark some excitement, the car crowd. Imagine being able to own a share of an iconic classic car, not just a passion project, but also as an investment opportunity. The car crowd has pioneered fractional ownership of classic cars, combining the thrill of automotive history with the potential for financial returns. It's a concept that's not only captivating petrol heads, but also catching the attention of savvy investors looking for unique and diversified asset classes. I'm thrilled to be joined by the founder, David Spickett, to unpack the origins of this innovative platform, why classic cars are emerging as a high-performance asset class, and how they're building a community of enthusiasts and investors alike. David, it's an absolute pleasure to have you on the podcast. Can I start by asking what inspired you to start the car crowd? And what problem were you trying to solve?
I've been into cars since I was about 4 years old. So I guess the inspiration has always kind of been there. I've always wanted to do something in the automotive sector. But I guess like a lot of people, I found myself after university going into a graduate scheme, and then I just sort of went into finance. And I'd always collected cars kind of in my private life and with my dad as well. When I was about 12 or 13 years old, we used to go around the auctions and I'd have a handwritten ledger taking the notes of what cars sold for what values and stuff. And later on, when we got our first IBM PC, maybe we put them onto a spreadsheet. So, we'd always kind of use data, and we'd always used a bit of head as opposed to just the heart to kind of buy the car collection that my dad and I had, going through my teenage years and off to university. And then when I got the opportunity to kind of link the finance world that I've been working in with my passion for cars to create something where, people could really join together to own the car of their dreams, if you like. That sort of was a calling, if you like, that was too big for me not to answer. And that was really the inspiration. I mean, the problem I was trying to solve was, myself, when I was in my 30s, I had a Ferrari 360, which was I loved the bits.
Nice.
My son was due. We needed a more sensible car. We had a Z4, we had a ZM4 and a 360 at the time, me and my wife. So, they weren't the most practical of a combination of cars. So we had to sell those to buy something a bit bigger. And, it tore at me to sell that 360. I'd spent a load of time researching and finding it and, knew it was the right one. Plus it was going up in value because it was a manual. It was red with the Nero. And I thought, wouldn't it be great if there was a way of being able to keep a stake in this car, whether that be, to use it and drive it, or whether that be just for the investment aspect of it, because I knew it was going up. And obviously that didn't exist. And that's really the problem. It was something I'd encountered, and I thought, this is great. And chatted to my neighbour over the wall who was also into cars, and he said the same thing. Why can't we just join together to own these cars and have some sort of ability to share them?
I mean, it makes perfect sense when you put it like that. Really, I mean, clearly, cars are a massive passion. They're expensive, so it's really practical. But in terms of if you put your finance hat back on, what makes classic cars such an attractive asset class? If you take away the passion that you've got for the cars, as an attractive investment class, what makes it, and how have classic cars performed in recent years?
Yeah, it's a great question, and I think you're absolutely right in terms of the perception of cars in general that they're money pits. That you're losing, between normally about 15 to 20% a year in depreciation, and that is true of 99% or so of cars. But there is a way of being able to spot cars that go up in value and that appreciate, and there's a certain there's a certain criteria that we look for here at Car Crowd that kind of makes it more likely that the car's going to appreciate. Scarce production numbers, low mileage, good history, things with a really prestigious badge, stuff that's been in movie and TVs and things like that. Those cars can appreciate. And then when you look at the investment opportunity of those types of cars, they're actually performing very, very strongly. One of the key drivers we look for is nostalgia. People that are now in their 40s or 50s going out and buying the cars of their dreams. And a lot of people would have seen that kind of impact on things like fast forwards, for example, now into some of the early 2000 supercars that are starting to shoot up. And those cars can return between, well, our average collection at the moment, you can't see it, but I'm here in the unit at the moment where we've got 90 cars under management, and the average.
I've seen them. I've seen them as well. They're very good.
Yeah, and the average appreciation across these cars is 15.6% at the moment. So that's it's a serious return on investment, and not only that, it's asset backed, which is really important. You look at things like property and gold. Those things are asset backed, and that's usually a very attractive thing to invest in because you have that security of the asset behind you. And then also for probably the biggest tick in the box for most people, especially after the budget at the 30th of October, is that the cars are still capital gains tax free. So any returns that you make, completely capital gains tax free. So you look at property, which is being taxed through the nose. Obviously the capital gains tax is going up, and they've got more stamp duty, all sorts of stuff. Actually, we're seeing more and more savvy investors coming into cars because it does tick the box of being asset backed. The returns are in the teens, and also you've got that capital gains tax free element as well. So it makes a really sort of sensible choice if you're looking to diversify a portfolio.
That makes a lot of sense, and that's something I didn't know post budget. So perhaps David, if you explain to us how does the car crowd work, and maybe walk us through the journey of an investor on your platform as well, please.
Yeah, so we effectively use the same underlying investment thesis, if you like. That's our sort of foundation. So it's very data driven. We use that thesis to recommend a number of cars that we think would be the fastest appreciating cars that people can invest into. And then in terms of the options that investors have, we try to make it quite accessible on the platform. So we create a syndicate. So people may have heard of that in racehorses, for example. So it's a syndicate where effectively each individual person has a direct ownership of that asset. So we create a syndicate. Let's just use simple maths and say it's £100,000. Let's say a Ferrari F430, manual gearbox, very rare car. One that we think is going to go up in value, somewhere in the region of £120,000. We would create a syndicate and normally say there's between 12 and 24 slots, so a minimum investment between £5,000 and £10,000 for people to join that syndicate. Once that syndicate is completed, we would then hold the car in trust, and then the syndicate owners actually get to vote every single year on some of the key things, like whether the car is obviously sold or whether it's kept for a further year. We do full reports each year that says what's the state of the market, what the latest valuation is, etc., that we believe we could achieve for that asset. And then when the timing's right, effectively the syndicate owners will then vote to sell the car. We'll sell that asset, and then we'll return the capital back to each individual syndicate owner in line with how much or what percentage of the syndicate they own.
And just in terms of a follow-up question, in terms of the valuation, are the valuations done annually, and by whom?
Yeah, we actually do the valuations quarterly. So we report that on a quarterly basis. And we have a proprietary tool that we use for the evaluation. So we look at data from Classic.com, Classic Valuer, Glen March, Haggerty Insurance, and we use that to create a benchmark valuation. Though that valuation is what we call a director's estimate, effectively. And then we compare that to any live assets in the market right now to make sure that our benchmark valuation is achievable in the current market. We often look at things like collecting cars as well, and some of the other sort of auction websites, just to make sure again that we're not overvaluing the car based on a retail valuation when actually there's auction cars that are going cheaper. And that gives us what we think normally is a fairly conservative valuation that we value the car at. And the two assets that we've realised full cycle have actually achieved about 15% over our valuation when we actually went to sell them. So we're normally deliberately under promising so we can over deliver in terms of the returns.
Yeah, that's very good. Excellent. And in terms of some of the challenges that you faced, I mean, it's not just about finding the right car, is it? It's you've got some nice proprietary technology. Regulation is obviously a big hurdle to get into this as well. I'd be interested if you just maybe give us some of the challenges that you've faced and how you've overcome them with the team recently.
Yeah, I think you're right, Mike. The biggest one is regulation. So we started off, I was very passionate about making sure the business was regulated or had a way of being regulated. So we were initially an appointed representative of a principal firm, which is a way of becoming regulated here in the UK, to offer what they call arranging deals and investments, which was what our license was. We did that very successfully for about 3.5 years. And the FCA have always had an eye on making sure that people who don't understand investments don't get into something that they don't understand. There is the fact that these investments that we offer, or the syndicates we offer, they are illiquid, which means you can't instantly get your cash out, and that's something that the FCA are very cautious about. So we work very closely with them, and that's probably been the biggest challenge, is the communication aspect. They're not particularly forthcoming at times. We've responded to every kind of challenge, every audit, every development of the product, the minimum investment levels, etc. And that has been very difficult. We actually decided to exit our principal firm earlier this year and actually signed a joint venture with a direct wealth management platform. Just because that gives us, as the Car Crowd, much more flexibility in terms of, and more focus, because we can focus much more now on finding the right cars, sourcing the right cars, doing all of the things around the assets, as opposed to worrying about dotting the I's on the regulation side. So owning Wealth Hub, which is the wealth management platform that we've signed a JV with, they're going to be taking all of the regulatory ownership. So we'll effectively be the suppliers of all of the syndicates, all of the cars. We do all the storage, insurance, the maintenance, everything as a kind of end-to-end managed service. And then they'll be presented for investment via a wealth management platform that gives you that direct regulation. So you kind of get the best of both worlds with us focusing on the assets, which is where our passion and where our expertise is, and then the wealth management platform focusing on the regulatory side, which again is where their expertise is. So we feel that's the best sort of safest journey for investors, but also gives the best longevity now for Car Crowd, because we're not having to continually update things and change things and amend things like we had to when we were looking at the direct regulation with FCA.
No, I mean that makes a lot of sense, doesn't it? It's safe, transparent for investors, and then you can really look at the performance of the asset base and do what drives your passion as well. So that sounds like a win-win to me. So, what's next for Car Crowd, David? I mean, how do you see the evolution over the next few years? I mean, clearly there's some tax advantages, which is great, but what do the growth plans look like? How are you going to expand the platform, the portfolio? And I'd love to hear about that. It sounds really exciting.
Yeah, there's a few. I guess there's a few strands. The first thing is I guess the product is Car Crowd in terms of what we offer. We're seeing a lot more demand now from what we call kind of institutional or professional investors. We started off very much in the retail space. We've moved that up to high net worth and sophisticated investors now. But the demand is coming. But I think because of the capital gains tax aspect, people are wanting to move money out of where they might be over leveraged in property or within VCTs or other kind of investments. And so we're getting more and more calls for things that we call a private portfolio, where a private investor might say, I've got $500,000 that I want to get out of property and I want to put it into the cars, or I've just sold my business, I've got £1 million, what do I do with it? We're seeing more of this kind of concierge stuff where we're working with people to figure out what the best route for them is. We've got the ability with the cars to look at shorter returns or longer term returns as well. We can look at the mix of cars, we can look at the appetite or the valuations and things like that. So it's quite a diverse product, and we're going to be evolving that into that more private portfolio space. So we're doing more what we call private office, which is effectively one-to-one private portfolios. We're obviously going to keep growing the syndicates. We want to still make sure this is accessible to more and more investors all over the globe. And we're partnering with businesses like Splint Invest and Alts.co in the US to present investments into other markets as well. So we again package up the opportunity and then they present it in their own market for investment. And then I guess the final thing is bringing all of that together into one amazing automotive hub. Our ambition and our aim is to have sort of 300 or 400 cars under management by the end of 2026, and that will all sit within one amazing, hopefully about 4-acre site down near Silverstone in Oxfordshire. We're currently in the design phase of that. We've got some land identified, and my ambition really is to create a haven for automotive enthusiasts, but also savvy investors alike, to come join together, look at their assets, hold events there, do some new product launches. We really want to have a cafe that's open to the public all the time, the storage centre that kind of operates like a bit like a motor museum. Really get these cars out of people's private collections and hidden underground and get them out into the light to be seen and to be enjoyed. Because although we are using them for investment purposes, and of course that some people hate that because they think cars need to be driven. In our eyes, we're preserving the heritage and the history of some of these cars, and we're educating future generations by keeping them in a way that's accessible and where people can sort of share their passion and hopefully continue on the thing that we all love, which is the car.
David, that's amazing, and I really appreciate you sharing your journey and vision with us. I mean, to me, I'm really excited about the car crowd, and I think it's not just about investments, but I really like this building the community around the passion element to it as well. In a safe investment environment. So I think what you're doing is fantastic, and can see the next few years being really exciting for you and the team. So thank you for coming on, and for anybody interested in learning more, we'll have detailed contact points on the show notes. But David, what's the best way of getting hold of you or having a look at what you're doing in more detail?
Yeah, if you go to thecarcrowd.uk/invest, you'll see our website effectively. So you can have a look at all of the assets we've previously funded, all the stuff that's kind of coming up, and please do go to the bottom and sign up for the website there, because then we'll add you to our contact register, and then you'll find out about any new syndicates we're bringing to market, and you'll basically get in the priority list for anything that's coming up in the future.
That's great. Thank you. Well, thanks for your time, David. Great to see you again.
Thanks, Mike. Brilliant. Cheers.
If you want to listen to more episodes of the podcast, we're on all good audio platforms. Our website is also www.cambriaprivatecapital.com. And you can also find myself on LinkedIn and Twitter, where we publish our weekly blogs as well. Please do get in touch if you want more information.